In regards to rates and fees, a contractor mortgage is exactly the same to that if you were permanently employed or self-employed. The main difference is how the lenders calculate your income. So most lenders treat contractors as self-employed because most use limited companies as a tax vehicle to pay themselves through. The problem with this is lenders work on the taxable income rather than the total income. Now, unlike most business owners, contractors don't have to pay out for things like premises, telephone, advertising, inventory, even interest, payments on loans. Now, the good news is some lenders have taken this on board. Some lenders have adopted their criteria or have specialist criteria for contractors. Here's an example of how this works from an affordability standpoint. Let's take Louise. So Louise earns £120,000 a year but is employed. So Louise has no option but for her employer to pay her tax bill on her behalf. John is self-employed. He's been running a business for a couple of years. The business has an average turnover of £1 million, net profit of £150,000, and he pays himself £80,000 because he doesn't need a higher income to maintain his personal expenditures. Finally, let's look at Rupil. Now, Rupil is a contractor. She earns £500 a day, but because her personal expenditures are low, she only pays herself up to the high rate of tax. So her first year's earnings, when submitted, will show around £45,000. Her turnover will be approximately £120,000, as there was a gap in contracts and she went on holiday. Now let's look at how much lending Louise, John and Rupil can obtain using standard criteria. So Louise earns £120,000 a year. She can borrow £600,000 a year. As you can see, she's very happy because she only needs £500,000 for her remortgage. John earns an average of £80,000 a year. He needs a mortgage of £375,000. He can borrow £400,000 using standard criteria. Once again, he's very happy. Rupil, on the other hand, well, she's only earning £45,000, plus she doesn't have 2 years accounts. For the lenders that will work off 1 year's accounts, the maximum amount that she can borrow is £213,000. This is a really unfortunate situation for Rupil. Rupil knows that she's in a position to afford the mortgage that she needs. She's looking to buy a house at £500,000 with a 10% deposit. However, the lender's only taking into account her taxable income. Now, if Rupil had come directly to Vanoa, we'd have used a day rate to prove income rather than what she declared to the revenue. Rupil would have been eligible for around £600,000. Now, given Rupil wants to buy a property at £500,000 with a 10% deposit, this would have been perfect for her. So the other difference between a contractor mortgage and a standard mortgage is experience. If you're permanently employed, some lenders will work off 1 month's pay slip even if you're in a probation period, as long as you have industry experience. If you're self-employed, you're going to need at least 2 years completed limited company accounts. Now, once again, as we discussed previously, lenders will only work off the taxable income. Now, if you're a contractor and you have experience in your industry, you've moved from, say, permanently employed to contracting and you're operating through a limited company, some lenders will work off day one, meaning no wait period. As long as you have a valid contract which is signed and we can evidence that you have industry experience, you may be able to move forwards sooner than you think. In summary, because you work as a contractor, the interest rates and fees on the mortgage deals which should be available to you are exactly the same as if you're employed or self-employed. Your income is going to be calculated differently because of the way you work, so being tax efficient makes no difference in your ability to secure that very competitive deal. Also, you may be able to apply sooner than you think. As you may expect, there's a whole host of other factors that are taken into account when assessing an application, regardless if you're permanently employed, self-employed, or a contractor. Obtaining mortgage funding is difficult, and I'd recommend working with a broker that has the right motivations. Thanks for watching.